Hi, One Rental at a Time community. This is Dana here at Hemlane, and Michael and I are on this show every Thursday to talk about what's going on in the housing market, particularly around rentals. Today, I want to switch it. Usually, I do most of the talking, but I've been told you have two ears and one mouth. You use them proportionally. And so I'm going to flip it and I want to ask Michael some questions here about the housing market and predictions for 2025. So, Michael, welcome to the show.
I appreciate this. I actually haven't shared my opinion about 2025 housing with anyone yet. So this is good time. Let's talk 2025.
Great. Well, my questions for you are worst, best, and base case scenarios. So, what are your predictions for the housing market? And I would start with the extreme of let's just get it over with the worst case scenario.
Yeah, so again, you got to remember as someone who cares about the middle class, who cares about home affordability, my worst case actually could be seen as a best case if you already own assets. If you already own assets, you're going to probably like my worst case scenario. But my worst case scenario is really simple. It's built on a couple of factors. Factor one, mortgage rates come down to between 5% and 5.5%, 30-year fixed owner occupant loans. And actually, I'll be more specific. I think 5.5% mortgage is the worst mortgage rate. Why is that? Because I think 5.5% is enough to pull a wave of marginal demand off the sidelines.
Mhm.
I don't think it's low enough to pull a wave of supply. If we got
Mm,
to like 4.5, I think we would see a wave of both. The move up buyer would be back and the market would essentially start to heal itself. The worst case scenario builds at 5.5, because again, more demand, not meaningfully more supply. Problem one. Problem two, again, in my worst case scenario, is the government comes in with some kind of free money, 10 grand, 15, 20, 25 grand. And of course, this free money will be aimed at entry level housing, which in my worst case scenario is already scarce. And it would only become more scarce in an environment where $20,000 in free money comes to first time homebuyers. In my worst case scenario, and again, if you own assets, this might be your base or your best case. I could see
mhm.
single family housing at the entry level going up 10%. Again,
Wow.
the supply is not there.
Yeah. Yeah.
Demand is accentuated by lower rates plus free money.
Yep.
I mean, Dana, that frankly scares me. That is my
Yeah.
worst case scenario is free money and low rates or medium to low rates.
Yeah. What about let's go to the other extreme. What about best case?
So my base case or my best case scenario is the government doesn't get involved. Doesn't get it. At least it doesn't get involved with free money.
Mhm.
In the best case, if they do get involved, it's all about supply. In my
Yeah.
worst case scenario, it was all demand driven. We don't need demand. We need supply. So in my best case scenario, and again, this is kind of counterintuitive for people who own assets. I want more entry level housing built. I don't know
Mhm.
if that's deregulation. I don't know if that's incentives for builders. I don't care what it is. We need to build more affordable housing.
Mhm.
And if this were to happen, what you would see is the average square foot of a home fall. That's how I'll be watching it. Because again, entry level housing is just
Yep.
smaller than McMansions. It's just logical. So in my base case scenario, any government help is supply oriented, not demand oriented. In fact, there's zero demand help. We don't need more demand. Also, on the best case scenario is we do have mortgage rates kind of at 5%. Because again, as I said, in the worst case scenario, we don't pull supply off the sidelines. But if we do get rates at 4.99, like 4.99 is the magic number. Like if you get
Yeah.
a 4.99,
Under five.
It's under five, and you have like a 4.25.
495.
Yeah, you're like,
495.
I'll sell, I'll trade. We need
Yeah.
the move up buyer to come back. So in my
Yeah.
best case scenario, builders are building entry level homes with deregulation and maybe some incentives. Interest rates are 4.99, which gives the move up buyer back, and we get that wave of supply
Hmm.
and the demand. And home price first off, transactions go through the roof. We'll probably end 2024 with 4 million homes sold, existing home sales. If in my best case scenario, we get the move up buyer back, we probably do 4.8 million, which is a
Okay. Yep.
20% pop in a year, which
Yeah.
is net good for the real estate industry and the mortgage industry, frankly. So we really get this rolling recession that I think we're in. Housing starts to come out of it. Builders are building more, mortgages are being more mortgages, real estate agents are selling more, right? We come out of this, the soft landing happens. Now, home prices. I think home prices are in this scenario relatively flat because again, you got a lot more inventory, you got a lot more buyers, there's just a lot more options and choices. So I would say in the best case, maybe plus or minus 2%.
Yep.
The key is building more and unlocking the move up buyer. That's my best case scenario.
Yeah, I love that about the supply side. I couldn't agree more with that because you're right. There's a lot of pent up demand of folks who say, you know what, let me just build something in the backyard. Let me just go do this kitchen renovation because they're thinking of that 3% interest rate as their asset.
Yep.
Even though it's debt, it's not an asset, but they're thinking of it as an asset because otherwise it would have to be 6% plus today. And so I definitely see that you need to focus on that move up buyer because that's the way to get the demand on there. And then
Yeah.
more housing, you're right, and more entry level housing
Entry level. Let's be very clear.
is
Entry level.
the
Yes.
important part. Yeah. So couldn't agree more. And then best case, and then sort of that mid case that you
Yeah.
were talking about, the base case there.
Yeah. I think the base case is much the most likely case is kind of a repeat of 2024. And what does that mean? That means transactions of existing home sales never really gets above 4.1 or 4.2. We kind of stay between 3.8. Let's call it 3.8 and 4.1. So it's just another crappy year for real
Hmm.
estate agents, right? Because they're used to doing 6 million. Now they're doing 4. I do think the mortgage industry has a little uptick, right? We've seen refi demand up, 94% 2 weeks ago, last week up 106%. I think there's a lot of people that were refi. I think
Hmm.
rates in my base case are roughly around 6, right? Roughly, 6, 5.8 to 6.2. They don't go low enough, right? They don't go to the 5.5, which was my worst case. They kind of stay in the high fives. And I think we just limp along. I mean,
Yeah.
unfortunately, what I called 2 years ago is we got all our appreciation in 3 years, so now we got to limp through the rest of the decade,
Yep.
and that's kind of where we are, I think.
Yeah, definitely. And then from a home price perspective, with the interest rates above their home prices, to your point, just sort of
Flat.
stay flat there. Flat.
Yeah.
Yeah.
And I think if in my base case or most likely case, again, whether you like it or not, the deals will be had above the median because
Hmm.
there will be just some people that have to sell, and you're
Yep.
going to get 20-25% discounts. But it's not going to be on the intro level housing in most cases because there's just nothing there. In my base case, the inventory is not unlocked because we didn't get to 499. We don't get any government interference. We don't get free money. We don't get building incentives. So it feels like you're stuck in the mud is my
Yeah.
thoughts for 2025.
Well, I'm hoping that we don't get stuck in the mud, and I hope there is, from the side of supply, a huge unlock there, to your point, to just help spur this because I think consumers out there also are frustrated by feeling almost stuck, and no one wants to be stuck. And so, reviving the economy from that perspective, I think, is super important. So, I love it, Michael. I am hopeful of that. That best case, but we'll go with the base case
Yeah.
as predicted.
Yeah, but at the end of the day, for real estate investors, because a lot of that conversation was owner occupant. The best thing for investors is nothing changes for us. We have a
Yeah.
buy box. We look every day. We don't. I mean, if you're an investor like me, you don't care what interest rates are. You just run the
Yeah.
numbers. You get 30-year money. It cash flows or it doesn't. It's either a great deal or it doesn't. And we just write disrespectful offers. We follow
Yeah.
up. We do the work. Real estate investors, you probably don't care. Best case, worst case, unless you own a lot of assets, then you probably hope for my worst case scenario. Um, but yeah, real estate investors don't change. But again, I'm someone whose life fundamentally changed because his parents were able to buy a home. It was the only reason we were able to live in the Silicon Valley because they bought in the 70s. And I just hope more families get that opportunity to get on the property ladder. So I'm hopeful that
Yeah.
government will incent builders and they won't incent demand. If they can listen to anything, go build, go worry about supply, not demand. That's
Fun.
my hope.
I love it. Well, thanks so much, Michael. This was super fun. And in 2025, at the end, we'll do a reflection on it.
I like it. Well, if somebody wanted to play or learn about Hemlane, let's not forget to point people at that. You offer a $0 option. You offer a trial. You have a resource tab. If somebody wanted to really get their hands on it, what would they do?
Yeah, Hemline, we offer property management. You can manage your rental properties from anywhere. Tons of different options. It's a plug and play. So you can be as hands on or hands off as you want. Mention one rental at a time. If you do use our paid packages, you get 20% off. You can go to Hemlane, HEMLANE.com. Thanks so much, Michael.
Thank you so much, Dana.